Carlos's project is a beautiful project. I've seen the pitch deck that he's going to walk through. It's the Riverside Wharf Miami QOZ development. It's a enormous hospitality and entertainment complex in the heart of downtown Miami, right on the Miami River. It's going to include an upper upscale lifestyle 167 key dream hotel and a whole bunch more. I'll let Carlos tell you more about it. Carlos, how are you? Good to see you.
Thanks. It's great to be here with everybody. We are not new to the OZ game. We've done a few prior to OZ. We've been navigating different incentive programs for areas in need and using the EB5 to develop as well. And so, it was great to start early on in the OZ space as a vertically integrated hospitality developer, operator, investor, and now lender as well. Over $3 billion of assets under management. And this is our most exciting QOZ deal to date. It's been some time in the making, and that's typical to our model. We take on all of the front work and then bring it in when it's more ready. So this project is in our backyard. We operate hotels all around the country with over 80. We operate in Miami, but we haven't done too many investments in the city, and luckily we're able to do this one in the heart of downtown Miami. Without further ado, let me get into it here. Again, Driftwood's been around for over 30 years. We're operating for third party and then control about half of our portfolio. We created a syndication model back in 2015 alongside institutional investor deals. So we've been syndicating to accredited investors for quite some time as traditional LP equity, and then taking advantage of different programs. This is our current portfolio to date of hotels under management. And as you can see, a lot in Florida, but not a significant exposure in Miami in the ownership side. So excited to bring that to the table today with the Riverside Wharf. So the way this project came about, as everyone I'm sure is aware, Miami has seen an incredible post-COVID surge, but pre-COVID, right? This has been something long in the making. For the last 20 years, we've seen the city grow outside of just being South Beach. Brickell area had seen the first surge. And just over the bridge in downtown, it was just very hard to get to a full revitalization. There were some important projects that have gone up over the years, but nothing that really connected the dots. And we're starting to see that take shape and happening. And so having the Opportunity Zone designation in this area, very important. This is right on the river. We have 500 linear feet here on this site. And so, to be able to develop this project and help bring Miami downtown, together, it's a great story and a great project. And so we came into it in conversations with our partners who had owned the land since 2012, I believe, and they had actually been working with the city since there's a city lease component on the adjacent parcel that we were able to include as part of the whole master plan, and they've been working at it for 10 years. Before we came in, I think we started conversations in 2021, beginning of 21, and then joined them. But they had a covered land play that resulted in one of the best bar venues in Miami. Just goes to show that the need that had been created in what is a entertainment hub. And not having something like that in this area. They ended up generating over $20 million annually in revenue. And it was just half of the site that you see here in tents is called the Wharf Miami. They ended up doing that concept, throughout different parts of Miami now in different venues. So this is an experienced F&B operator. They're going to be bringing back the Wharf concept as part of this mixed use program. As we mentioned, just the dynamic MSA overall. Seeing tremendous growth, and it's only continuing. This is not a COVID-only surge. We're seeing this be a real lasting move and migration to this area, and projects like this one are in very much high demand. But again, one of the top hospitality markets in Miami. I want to pull up the snapshot of the project facing Brickell. As you can see here, this is the Interstate I-95 main thoroughfare of Miami, right off the exit, and right on the river. On the opposite side, you'll see that underneath the overpass where the main access is and thoroughfare off the exit, there were a lot of parking lots, city parking lots, that we're entering into an agreement to lease. So it just helps with the overall construction costs, not having to build the parking, still have LA and access to all of that city parking. And currently, given the way it's all laid out in downtown today, just in that section, that's where you've seen some homeless areas under the bridge in those city parking lots. And then you have the new developments that are going up, residential towers, over $1 million a unit, and you needed to fill in these spaces, and we're seeing that now. So this anchors the turn on the river. Up the river, there's a couple of restaurants, but nothing really like this, where you're gonna have 500 linear feet of dockage. And so it's a truly mixed-use complex. On one side, we have the Dream Hotel that is, catered to the nightlife market. Dream was actually recently acquired by Hyatt, as it's grown in the lifestyle space, luxury lifestyle, tremendously in that niche. And so there's really, not much else like it, which is what Hyatt, it paid an incredible price for it because of the growth trajectory that it's on. And this one being a marquee project for them. And it comes with everything that it stands for in terms of the project, with all of the entertainment and nightlife. This is like Vegas, transporting to Miami. And as much as Miami has had that in South Beach, it doesn't really exist downtown. And even in South Beach, there hasn't really been venues like this opening up. We're going to have a nightclub, a day club, two signature restaurants, an event space that overlooks the river. That's world class. A restaurant in the Dream Hotel, rooftop pool of the Dream Hotel. So it's essentially two towers, the hotel tower and the entertainment tower, and they connect via these bridgeways. So it keeps the separation while having the connectivity. On the ground floor, it's that reimagined Wharf 2.0 that I had mentioned. I have a lot of slides here to show you guys on the project in general, so I want to cut through them all quickly as we don't have too much time. And happy to connect with everybody after in QA and after the session, should there be interest. But we just couldn't be more excited to participate in this project. We ended up coming in at a great basis on the land, worked on the referendum to finalize the city lease, which is again below market. So we're contributing that land value at our cost basis and the win of the referendum. As you can see here, we're right at the edge of that QOF zone, but this is really a critical part of that revitalization of downtown. We've seen some projects come up here like Miami World, et cetera, but not as much west and of the river. And so to be able to do that in a city that's known for boating and access, there's just not that much that you can get to via boat. So to be able to contribute that and have that mix it's great, because there's conversations right now of how do we connect that walkway, and it's already been planned out, of having a fully opened pedestrian walkway all the way down the river and wrapping around to the mouth of the river. This is a shot that gives you perspective of the entryway opposite the river, right off the highway, and direct access to the drop-offs. Hotel on the right, entertainment tower on the left. 167 key hotel, 20,000 square foot of meeting space, 100K of nightclub, day club, restaurants, Wharf. So true entertainment complex. And we're right at the point of breaking ground in June. Have the senior financing in place, doing buyout right now with the contractor, form GMP negotiated, waiting on pricing to finalize that. We're anticipating 267, but right now is a good time to be in the buyout process. So excited for that. The project team is, this was one of the things that was discussed in the diligence, right? In terms of track record, experienced sponsor. Our partner is the same in terms of MV being the group that has done a lot of the F&B and have done the Wharf concept and brought us into this deal. Merrimack Ventures, groups that we've partnered with before on other OZ deals. They've done luxury hotel towers, and they were critical in developing Miami World as leads of the project. General contractor Moss, one of the most respected contractors in the industry. iCrave, one of the leading interior design companies, especially that gets across not just hospitality on the hotel space, but also nightclub, day club design. Cube 3 is an architect, extremely well-known group. So really, the best combination of talent. On the document side, again, we used Holland and Knight for the OB zone structuring. Given our experience with EB5, we're also including EB5 in the project as financing, which is a benefit to the op zone investors. And that structuring we did with Greenberg. So really well thought out, concepted. We're just finalizing term sheet right now with the joint venture partner operator with our sponsor Breakwater that is doing the Wharf, bringing in a national nightclub, day club group that is extremely well known and recognized, one of the premier groups in that space, and very excited to announce that soon. So we've been in this point right now where we have some OZ dollars raised, total target roughly $50 million of OZ, but we've been waiting to announce the broader raise until now, that we're finalizing all the docs and all these components have come together with the plan to break ground in June. This gives you a sense of the design, the renderings, and the layout of how we've done the tower. Again, we didn't want as much noise transfer. That's why we said, separate towers made a lot of sense. The hotel is also on the fee simple side, the ground lease, long term with the city, and excited for that, but it made sense to have the entertainment tower sit on that. There's an incredible, because of the relationships with our sponsor on the Wharf side, and with the nightclub, day club being negotiated through them with the operator, there's an incredible profit participation component that's outsized from market, that's going to significantly help in how we ramp this project in opening, because we also have the base leases, market leases on all these spaces for the entertainment tower, but we also have the HMA for the signature restaurant with Dream. So overall, it is significant cash flow from the F&B via both the profit participation, the HMA, F&B venue space, and HMA, by the way, is the hospitality management agreement with Dream as the operator. So now through Hyatt and Hyatt World Points. So again, a great combination of cash flows that day one means of opening, which is 2026. It's a 2-year timeline. Means a great annualized yield to investors. We're projecting north of 12% for that first year of operations. If we hit our targets of opening at least the hotel and Wharf before summer 2026, May, June of 2026. Again, this is not in our projections, but that is also coincides with World Cup in Miami, and Miami being one of the key cities in terms of the amount of games that it's receiving, et cetera. It would open up with a very strong boost to cash flows and flow nicely into what then becomes high season that we've seen just tremendous performance, and then opening the other venues in a staged fashion. So very excited for that potential as well. Not currently underwritten. And what's great about it is on the time frame basis, as we know with the program, at least the way it stands today, it's that tax payment date by the end of the year. There is going to be some cash flows already to generate for that. Overall, with refi included, it's about a 20% cash on cash over the life, just given the amount of flows from the venues, and a 20% IRR on this 10-year hold. And it comes back to the structuring of the deal, of the leases with the profit participation and the hotel performance. Here's a good view of the competition here. This is in Brickell. There's really nothing like this on the water with this amount of dockage. I haven't mentioned yet the dockage revenues, the ancillary revenues of parking that we're going to be generating through valet. We're going to also offer membership given the scale of this complex. So all of those ancillary revenue streams make this truly unique in Miami. What we're seeing here is our ramp up. We're anticipating starting at ADRs equivalent to where that comp set market is as of last year. So, typical to what we want to do, make sure that on all of these components, we have a lot of benchmarks for the values that we put into our pro forma, and feel very comfortable with our projections and assumptions of growth. This is just, the hotel, bar, and lounge. So not even one of the signature restaurants, just incredible design and thoughtful all around, adding a very high-end appeal with a little bit of that grittiness of the Miami River. And again, central to the program, and what we want to highlight always, is the amount of direct jobs that we're able to create, over 1,800, indirect 1,400. So significant job count needed in this area. It's great for OZ, great for EB5. and needed in downtown with the growth that we're seeing as it becoming an entertainment hub. So couldn't be more excited to create this win-win opportunity with the OpZone program. We are expecting, I mentioned the IRR, it's a 3.5 equity multiple on that 10-year hold given the duration. We are anticipating the total cost at 267 million, and we already have a senior bank for 50%. The mezzanine loan from EB5 would be an additional 20%. And then we have sponsor equity and the venue build outs that make up the differential with the QOF at about $50 million. So all in all, a well thought out cap stack structure with a lot of flexibility on the mezz, given the EB5 raise component, and that's at a 10% rate, which again, you don't see in the mezz space. On the senior side, it's with Centennial Bank, a relationship bank. We're getting that senior construction loan sub 10, which in this market, very difficult for a deal this size, $125 million loan. In terms of, risk profile, really have, de-risked it relative to what we're building here and what we're doing with the structure and the quality of tenants alongside the operated components. Here's a shot of the Wharf Miami. Again, this one, as just beer tents, was generating $20 million a year pre-COVID. We've shut that down to start developing. We've already been working on the seawall, so it's been offline for this entire year. But they have an immense following and are now coming back with 30,000 square feet. And we're going to be getting 70% of that profit participation until an 8% IRR, and then it flips back to the operator for the nightclub, day club, because we've negotiated with a national group that's a preeminent group. It's at 50%, but they're also contributing capital to that build out. Part of what I meant as the equity build out here. Let's get to questions again. I didn't even get to the cap stack or the revenues here, just with the amount of pictures that we put up on it. But again, happy to share that offline.
I think we'll be sharing this presentation deck on our website for our attendees to view. There we go. That's the money shot right there, Carlos. Scan that QR code to get more details, or email Carlos's team, info@driftwoodcapital.com. We did have one question come in about EB5 and OZ benefits. The question is, are EB5 and OZ projects compatible? I think the answer is yes, but how do you kind of view those two different types of equity coming into the to one deal like this?
Yes, absolutely compatible. We've already done it for two OpZone projects of ours, one in Fort Lauderdale, the other one in Wilmington, Delaware. That was an office conversion. And what's great about the combination, really when you think about it from the OZ perspective, I think it was touched on diligence side, right? These projects need to stand on their own as equity investments, and you get the OpZone benefit. That's not exactly the case with EB5. This is a visa-based foreign investor program where you're investing 500,000 previously. Now it's 800 if it's a targeted employment area. Again, the QOZs generally qualify, and so with that new higher amount, that investor invested into a qualified deal, and they have to create the jobs, 10 per investor. So you do it via regional center. We have our own regional center. So all of those aspects of the program are carefully vetted for our team, and it's a shorter timeline for them, and that's why we're structuring it as we've done actually EB5 debt and EB5 equity. Equity we bring in as untermed and at lower profiles if we were to do like an OpZone. In this case, with the EB5 mezz debt, we have long-term extension options, and really the plan there is eventual refi takeout. We already have that modeled in this deal. The EB5 debt we get up to it's 20%, so 70% total financing on the project, but at again favorable terms of 10% accrual based, etc. So not your typical loan, which is again great for the OpZone investor who can leverage off of that like it would on a lender, but at a reduced cost basis.
Terrific. Carlos, really want to thank you, appreciate your time and support today, and thank you to Pranav and Alex and everybody else at the Driftwood Capital team for making today's presentation possible. I just scanned that QR code and it took me right to your website. You can also type in the address if you want, driftwooddealdirect.com/OZ. Carlos, thank you so much for being with us today, and terrific presentation, beautiful project in Miami. Thank you so much.
Thank you, Jimmy. Take care. Thanks, everyone.